Good afternoon, and thanks for tuning in to today's Channel Final Bell. I'm Alex Makovica on the Rural Radio Network. Sam Hudson with Cornbelt Marketing is joining us to break down today's market activity. We talked earlier this morning, Sam, to which you alluded to the grains basically shifting their attention away from tariffs and all the headlines, focusing a little bit more on weather, things that are seasonal for this time of year. So we're going to dive into all of those factors, but 30,000-foot perspective, Sam, as you look at today's trade, what did you see?
Well, I think we're continuing, to shift from what's been a demand-led market since really a harvest, the beginning of the marketing year, to this supply-led stance, as you mentioned and alluded to here. And all this outside market noise has kind of happened right as that transition takes place. And so this week, I think, is going to be another, gray area where we start to meld all of that together. And we continue to see highlights of both of them. We saw another flash sale this morning. We saw export inspections that were not only ratcheted up for last week, but beat the expectations for this week. And so we justify those numbers that we saw in USDA's data last week with the increase in export demand. And now we sit here and debate whether or not we need to ratchet up or down any, area projections that we saw on the March 31st report.
All right, you mentioned those export inspections today, strong numbers. Do you think that kind of demand is sustainable here in the short term?
I do, at least for now. I really feel confident about what we're going to have shipped here, at least as we go into June or July. I think the bigger question mark is going to be if we have to throttle any of that up later on in the marketing year. We've kind of gotten back to par with these recent adjustments from USDA, but we know that we're still the largest producer on the planet, and if we have any, notions of a production problem, you could see additional demand come our way as they come after that old crop until we finally get to a new crop harvest. So I think that's the hinge point here as we get into the summer months when we really start to banter about yield. But before we can even get there, we got to talk about what's possible from an area standpoint. And with 95 million already put out there as the benchmark, it's a pretty lofty number. We need to have weather cooperate to even get there in the first place.
Yeah. What sorts of weather concerns are you guys seeing across the growing region right now?
Well, the first one is a trend that I think that we've been really seeing stick for the better part of the last, I would say, 9 months, and that is a warmer, drier bias to the northwest Corn Belt as we get into particularly northeast Nebraska, parts of the Dakotas, and even Minnesota, and more intently here in the short term about the flooding we've seen down across parts of Kentucky, southern Illinois, into Indiana, Ohio, and it looks like they're going to get another round of it here over the next week or so, and so that's going to stretch us into, the first part of May at a minimum. And we'll see if things get extended even beyond that. But those are our first talking points, I think, as we look at that acreage, guess and how that could change.
You have mentioned, and we have seen it here across Nebraska here over the weekend, planting progress is finally getting underway. It seems like producers have kind of been itching to get out into those fields. But planting progress so far, where is it sitting at? I know we'll get an updated number this afternoon, but we don't have that yet. What do you see in that, and how much weight is it putting on the market right now?
Well, not a ton just yet, and I think part of that's due to a trend that we've seen be more prevalent here over the last 5 years or so, and that is if you have decent weather early, farmers just seem to be more apt to put the beans in first. As long as you have treated seed, it seems like ground temperatures become a bit of an afterthought as long as you can see some warming temperatures in the future, and that's exactly where we stand right now. We still had overnight temperatures here in the low mid-30s here as recently as last week, and now kind of only getting into the mid to upper 40s, but as we start to see those overnight lows exceed 50 or even 55 degrees here as we get into May, that's going to provide a lot more interest in starting to seed that corn crop, and you definitely want to have better conditions as you drop that seed in the ground. You don't want to be, getting that first nice cold drink on a corn crop, and I think beans are a little more resilient in that affair. So I really look for that over the next 2 weeks, find some interest to see how many beans we could get seeded and what that is reported at.
Shifting focus just a little bit, you mentioned this morning NOPA numbers will be coming out later this week. I can't remember the day exactly, but what do you expect to see? How will that impact trade?
Well, our biggest change factor in that context is going to be coming on the forward curve in terms of policy and organic growth and just all of these biofuels, in particular the used cooking oil that we've been seeing coming in from China. If we can regulate that, I think that provides a very stable ground for us moving forward. But I don't know that we're going to blow the doors off any of the expectations as far as our month-to-month numbers because there's so much uncertainty of what that's going to look like that no one really wants to commit any more to it than they already have. So I don't know if we're going to see any numbers change enough to create any sort of bearish sentiment. I think we're just going to continue to use this stuff along the way. And just like the corn, we're going to move into more of a supply-led market, and that relates to that area and then yield question mark as well. But no matter what happens, Alex, we know that Brazil is going to be ready to seed a lot of soybeans again next year, and that provides a bit of a backstop and a little bit of a comfort level, if you will, as we get into the summer months.
Well, let's dive into South American production in the second half of this conversation. Real quick on the wheat front, the leader to the downside today, what was the pressure behind those complexes today, Sam?
Well, the main thing is looking at a better weather forecast for the Black Sea region. We know as it pertains to South America that Argentina's crop did not finish well. I continue to expect to see production ratcheted down for South America, and I would include Brazil in that as well. I don't know if the cuts can be so dramatic that everyone's going to panic or anything. I think we're far enough along in the season that we're not going to see that. But if we put the ceiling in there, that continues to put more and more pressure on the U.S. Now, we've got plenty of wheat domestically here, so I think our basis and our spreads are going to be impacted more than anything by our production here in the U.S. But the global situation is still going to set the barometer for everything. And the one support factor that we've got in the wheat is that as long as we can hold last week's lows, I think you still got funds that are pretty well short here. And so if there's any sort of a rush to reduce open interest, that can actually be a beneficial tailwind and maybe get a little bit of a lift there. Hopefully you can get back over that $6 mark, but I just don't see the reason for it today. It seems like we play whack-a-mole every time prices get up there.
All right, Sam Hudson is our guest today for the Channel Final Bell this afternoon here on the Rural Radio Network. Coming up in the second half of our conversation, stay tuned. We'll be diving into South American production and its weight on the corn and soybean trade specifically. Also touch on a flash sale that the market saw this morning. And we will dive into livestock factors, live and feeder cattle seeing some more modest support today. That is the first half of today's Channel Final Bell. We'll take a break and be right back. I'm Alex.
When challenging conditions arise, we don't back down. We up our game. Outpacing the competition with innovations fueled by Bayer's R&D, keeping you equipped with an expanded portfolio, elite genetics, and additional local test plots. Channel leads the field, so you can rise above. See how at channel.com/rise. Read and follow pesticide label directions, grain marketing, and other stewardship practices.
Good afternoon. Welcome back to the Channel Final Bell here on the Rural Radio Network. I'm Alex Makovica. Sam Hudson rejoins us with Cornbelt Marketing to break down today's market activity. We touched a little bit on factors influencing today's commodity trade. We haven't touched, Sam, a whole lot on South American production. But as you have alluded to, it's a big focus of the markets right now, and it typically is. South American production, where is it at right now?
Well, we continue to see a pretty decent expectations for that second crop safrinha corn. There was a lot of concern that central and eastern Brazil were going to go dry, and we have seen a little bit less soil moisture, but we don't get the seasonal temperatures this time of year like they typically do in their middle of summer. And so we're not seeing any production forecasts walked back, at least aggressively. I think as mentioned earlier, I think you've seen the ceiling there. But I think the biggest aspect I would see is just look at their domestic prices. Brazil in particular, despite the fact that they're just upon this harvest, you're still seeing their domestic prices rally, and I think that's a reflection of how strong and robust their biofuel programs are. And while we sit here and flounder about where we're going to be here in the future, we continue to see those programs abroad grow. And Brazil is not the only one. We've seen that happen in India as well. And I think that's probably the budding demand that offers the best support for our markets moving forward. It's just trying to figure out how our government's going to regulate and apply all of it. So I would say that's probably my biggest observation at this point. It's just nice to see how well we've been supported or buoyed in that regard. And, again, that could add a lot of volatility this season if we have any supply disruptions.
Mm-hmm. All right, flash sale to Japan this morning. Remind us of the details of that news.
Yeah, so we saw another flash sale to Japan, on U.S. corn. And again, where else are you going to go to get it? We've mentioned the rally in the Brazilian prices, so they have supplies available, but not necessarily on the scale that we do. And again, not only are we looking at not only the supply side issue here, but if you look at across the globe, stocks to usage is under 9% for not only the global importers but also the exporters, and we're the biggest person in the room there. So as long as we have that dynamic continuing, it's going to be really hard to break this corn market, no matter what the tariff situation or headline situation is, until we at least see this crop in the ground and get a good idea of how we're going to go into the pollination cycle.
Due to, Sam, last week's market activity, which will surprise nobody, the WASDE kind of went under the radar. I'm guessing, no numbers in that are currently impacting trade today, but if so, what numbers might have stuck out in your mind and impacted maybe Friday/overnight trade?
Well, it has to be the export number. I mean, I think it was easy to assume that number was going to see an uptick going into this because we've been nothing but, ahead of pace on exports really since the beginning of the marketing year. The fact that they raised it so much, though, leaves a person wondering how you can continue to see upticks moving forward without something to facilitate it. And I mentioned if we start to get, word or whiff that we're not going to get 95 million acres in, what if it's closer to 93 and you put that fear into the market? Those people that need corn may step up to the plate and go ahead and get it booked so they know they've got it and can protect themselves later. And I think that's probably the biggest thing here moving forward. And having the confidence that demand is there and not wondering if it is or isn't.
Yeah. All right, let's shift focus real quick to livestock trade. We see some good support in live and feeder cattle yet again. It seems like this has been going on for a couple of days. The push behind live and feeder cattle, is it still outside markets? What do you think?
I would say mostly, when that all started to collapse, it happened during a time where I think we had record fund length in the feeder market in particular, and a lot of fund length in the live cattle market for that matter. And so when you get that knee jerk, there's really just kind of a vacuum in marketplace, and we saw those futures values traded really a historic discount to where those cash markets were, and now we're seeing that conversion start to take place again, where these cash markets are kind of flat, maybe even a little bit lower, a little bit higher week to week, but these futures continue to close that gap again as we get into the end of April. And I don't see anything to really derail that. Our numbers continue to support positive price action. And the biggest question is going to be where are we going to be come June, July, or August from that economic sentiment and also from imports, be it from Mexico and how the tariff situations are affecting all of that. But no matter the case, you continue to take the older producers out of the market, and we need to continue to expand the trade, not reduce it. And we've continued to struggle to do that here. And moving forward, I think it's going to be tough to do that before the end of the third quarter.
All right, Sam, we've got day number 1 under the belt now for this week's market trade, a shortened week due to no trade on Friday for the Good Friday holiday ahead of Easter. But for now, what do producers need to have on the top of their minds as they think about their marketing plans?
Well, from corn and soybean standpoint, watch that forecast, because if you continue to keep that wet weather in the south and eastern corn belts, there's a lot of area that's kind of under fire here. And we all want to talk about the risk of lower yields, this fall or this summer, whatever the case. But you got to get that crop in to even worry about the yield first. So I think that's the first thing. And if we continue to keep that there, I think it's a pretty easy expectation that December corn is going to go back and retest this most recent swing high around 475 to 480. And if you get an inflection point up there, it might be a great selling opportunity as long as things look good for you.
All right. Thanks so much, Sam. Sam Hudson is joining us today, the Vice President and Ag Marketing Consultant at Cornbelt Marketing. You can contact Sam and his team in Illinois by calling 1-800-655-3380. The Channel Final Bell is brought to you by Channel Seed and your local Channel Seed Pro. Do remember, trading of futures and options does involve a substantial risk of loss and may not be suitable for all investors. I'm Alex Makovica from inside the Nebraska Soybean Board Studios, brought to you by Nebraska soybean farmers and their checkoff. That's a look at today's market activity for the Channel Final Bell here on the Rural Radio Network.